Well, good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, the 14th of July, 2025. We're getting towards 6 p.m. Central Time. All right, my friends. A down evening early on as we're taking a look at what's going on in stock indices. Not a surprise. I don't know if you watched the rally today, but especially in the Dow, the market was trying to lose its embedded reading all day. It's again doing it tonight. It's lost it in the early evening. I'd be very careful. You also didn't have any pizzazz in the Russell. Now, we're going to get some important numbers in tomorrow. They're going to affect everything. Let's get to them and take a look at what you're looking at. You're going to get the New York Fed Empire Manufacturing Survey. They're looking for a -9 from the prior month. May's reading was -16. June CPI, this is what everybody's going to pour over, me included. They're looking for the tariffs to now start showing up with inflation. Will that be the case? It's been disappointing for several months. Now they're looking for it to go up from May's reading of 1/10 higher to 3/10 higher. On a monthly term, they're looking for 3/10 over 1/10. Yeah, that's month to month, and this is on just core CPI on there. The CPI in annualized terms is forecast up 2.7% from the year ago month, and the core year over year is expected up 3%. That would be the process where you're starting to get that number. If you do, how will the market react to it is the big question. We've been expecting it and been inspecting it. Don't know. What the market did, obviously, over the weekend was the market reacted negatively, which I thought it would in the morning, and then rallied back as it so often does after you get that tariff news out. I'm warning you, you don't have to react that way on the CPI. If it's a hot number, it could create a bit of a correction. Got to be careful tomorrow. Red Book Group, they're going to update their weekly retail sales data at 7:55, and API numbers will come out at 3:30 in the afternoon. So maybe what we do, just let's take a look together and go right to the charts because they'll tell us where you're at. If the market were to end right now for the week, you're up 0.5%, all right? I mean, you're not up even a tenth. You're up just half of that. So basically you're unchanged at this point. When you go, though, and you start looking at the daily chart, we're getting distribution up here. What is that going to do? Well, the pattern is still bullish in the sense that you've got higher lows and higher highs. I like what I'm seeing there. If the market breaks down, 62.24 could be the support off the 18-day average of closes. You'd have a problem in the market if we take out tonight or tomorrow, yes, today's high. And today's high in the market, I'm talking Monday's high, not the Tuesday session, has been 63.15. We haven't done that yet. But if you did that and then came for these lows, you'd actually set up a bearish pattern. You'd have lower highs, lower lows. Just breaking without taking that out would be a better pattern and set up, I think, 62.24 for a better zone to look for. If we take off to the upside and don't look back by getting over 63.35, it's only 32.5 points away. You could be looking at the 64.17 level. I think tomorrow's going to be one of these pivot days that you move off the CPI number. You have your fully embedded slow stochastic reading. So in this chart, I'm fully in the bull camp. When you look at the Nasdaq, you have the embedded reading, keeps me fully in the bull camp until the red line closes under 79. Pullbacks, as I said, they're getting bought. You had an outside day up today. You don't want to see today's low taken out. So if you had to have a really tight area where you're saying, you know something, I want to be ultra cautious, I would be looking at today's low as a number you don't want to see taken out. That could be a move that still you keep the embedded reading. It's one thing to be coming out of the market. It might be that you missed part of another move. But if people ask me for a stop, that's it. Notice in the Dow, you're down 60 points tonight. And again, you're under a 79 reading, got a 77 reading. The market stays like this. I don't see why it can't get back to the 18-day average of 44,128. I was telling clients today, I think the prudent thing is just come out of this one. And the reason is it's gotten ugly. it's struggling to stay up. You've lost the bullish incentive, and now you're losing the enhanced Bollinger Band. Not the pretty chart. In the Russell, you're also under a 79 reading. So if you finish like these, it's under 79, you're probably coming back into the zone. I'm not looking for big breaks. I want to make that real clear, unless the CPI is a real surprise, bigger in scope than the numbers that we have right there. Beat those expectations, anything can happen. We then come to the DAX and look at how it's given you this correction all the way back. Again, you lose an embedded reading, and we can come back here, I believe. Let's see. That's not letting me do it. All right. I wish it would. I'll try it one more time for us. Yeah, there we go. Sometimes you got to play with these devices. On Friday, you were embedded. You lost it on the close today. So the odds, and that's because you closed at 65.48. So that momentum trade ended, finished. You'd have to have a monster day tomorrow to the upside, probably gaining dramatically towards the upper Bollinger Band to re-embed. Otherwise, I'm expecting prices to get to 44.58 and fight a battle there for whatever it's going to do. Look at how you've gone from the upper Bollinger Band now to the lower bands again. I said this is all sideways action here, and that's going to give us an idea. It's going to break out to the top or the bottom. I think people are buying calls, buying puts, a little longer dated, and they're waiting to see, can you break out of this or not? Others might be writing strangles, betting that the market's never going to come out of that, and they want to collect the premium in these markets. I think you have a lot of option trades going on both ways. I prefer neither. Most people that trade options, most options expire worthless. So I'll let them play that game. In the dollar index, higher lows, higher highs, and as you could see, overbought. So you've spent a tremendous amount of the energy covering the short covering. Is that it? Did we bottom out, or does the market have another leg? I'm scratching my head, don't know. How's that? I'm in that camp that doesn't know, because the weekly charts are fighting the daily charts. They're not together. They're both not in uptrends or downtrends together. Euro currency back down to the 18-day average that I've been looking for over and over, and I think the Swiss franc's going to do that too. You could be taking the pound down here. What's going on? Well, everybody now knows where they're at on tariffs. Now we're looking to see, does the U.S. keep the inflation running? If it's going up, I don't see the Fed cutting interest rates. I know you do. I don't. You being the general public, because people are plowing in and they're saying, oh, come September, the Fed's got to cut. And I'm going to argue over and over. If inflation's going up, you then have the Fed sort of caught. You'll tell me, well, Ira, then labor's going to weaken because of that. We haven't seen that yet. What we know is so far, labor's been super strong. So keep your eye on job reports. You know, when we get the jobless claims, you got to keep your eye there. But you can see what the market's backing off a little bit on. Bitcoin. So I did a price count just before the show. I wanted to know what my first real upside might be if the market can stay as strong as it's been. 133,000. Not, I thought it could be 150. No, it's 133,000 is my zone. So from here, it's another 13,000. It can come up. Deep breaks, yeah, I'd be interested in telling you to get long, but not yet here. When you come to the crude, we tried the up today. If you're a subscriber, you heard me say in the morning, I don't understand the rally. I said, why is crude oil rallying? I don't see it. If the tariffs are coming out and they're going to be at 30%, and that seems to be President Trump's favorite number right now, and if anybody retaliates, it can go to 50% very quickly. You think that's bullish for this market? I'm not in that camp. Goldman came out with their ideas on the market, and I cover that in my newsletter. I don't like to give you everything here. It was all there. When we look at what the WTI is, you're back under the 18-day average. So while the trend is up, you keep losing the pizzazz of able to stay above that average. Or if you look at the 200-day, and I teach you over and over, once you're down under that 200 for a while, when you come back up to it, it's resistance. And that is what we're seeing temporarily. Let's go back here. Gasoline, fighting a battle to stay bullish. and it is right now. You'd have to get back under $2.1367 in order to break the uptrend. That's only about 3 cents lower, so keep your eye on that one, but it is friendly at this point, and I do see buying taking place. And you got up high enough to negate the downtrend in the nat gas. Looks to me like you're going to get a rally that probably tries to get back to the 18-day average of closes and fight a battle there. So you put it all together, you come up with ideas. And this is the time of year where you start watching weather, you start watching all the other ideas that you can get together, and it all's there in our mobile app. We have a mobile app that is tied to National Weather Service, to weather services just dealing with drought conditions for commodities, where in the country those conditions are. Our research all flows through here. You can read what we do. We make it in a way, but I have some of these apps, I can barely read what they are. They try to cram so much information. This is my actual screen. Does that look to you like you can't read it? I didn't enlarge it. That's the actual pictures that we're doing. All my videos will play on this as well if you're a subscriber to them. The research, as you can see, graphics, as you can see, you can trade off of it through us if you have a trading account with us. Audio reports coming through it, all in one app. So how do you get this? We give it as a free trial to you. All you need to do is go to iraepstein.com, and when there,